Cool. All right. Welcome, everybody. Today is July 14th, 2025. This is the Bookmap stream with DARMA Capital Trading. So my name is Spencer Riegle. I am the Chief Crypto Options Trader and Strategist here at DARMA Capital Trading. We hop on each week and we talk a little bit about markets. So we usually take it from a top-down approach, what's happened in the last 7 days since we hopped on, and then we dive into some of that more microstructure of the market. So you can follow me at _RIEGLE, just my last name on X, or you can follow us at DARMA Cap Trading on X as well. We post anything from educational content to market outlooks to just cool things that we're taking a look at. Or you can reach out to me personally at LinkedIn, Spencer Riegle, so just my full name. I'm fairly active on all of them, so don't hesitate to reach out. Another place that's great to reach out to me is here in the Bookmap Discord. So let's start out with some disclosures first before we dive into things. But all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So each session, each week, we always start off and we start talking about risk capital, right? And so what we believe is you should only be trading with capital that we deem to be risk capital. And what is risk capital? That's capital in which you're willing to lose, right? Purely from a risk perspective, if that capital is going to impact your life in any way, if that can range from bills at the end of the month, groceries at the end of the week, to even a positive life event, right? Going to a concert, doing some things like that that have a positive impact on your life, your mental well-being, and just quality of life. If you lose that and it impacts all of those three things, that's not risk capital, right? A couple of reasons why we always start talking about this. And the first is psychologically, if you're thinking about that concert, right, you have a couple friends that you want to go with and you're going to have to let them down and say, look, I took a trade and it didn't go out my way. You're not going to approach that trade clear-headed. Same thing if you have bills. Same thing if you need to put food on your table, right? And what we are here to do every single week is to present the facts, right? Markets by nature have a sense of randomness to them, right? So just because there's a statistical edge or there's an edge within proprietary analytics doesn't mean that markets always have to perform to any expectation. There is fluidity here. And so that's why we always like to start kind of talking about it. And level head is somewhat priceless when it comes to trading, right? And so if you can think about where you would like to take the risk, right? If the market's going against you and you're able to position, reposition, and optimize that kind of risk overlay, that's a much better position than being in a psychological area where if you take a loss and you can't take a loss and you need the market to go in a direction, right? The market's going to do whatever the market wants to do. So we start out each week and we talk about risk capital. So we've migrated over to our site for all of our analytics and kind of our presentation. So we'll get into that next. But for those that are new, and if you're watching the recording on YouTube, or if you're just tuning in to the recording or live stream on YouTube as well, what we like to start out each week is kind of a top-down approach. So we take a bird's eye view of markets, what's going on in the world, how is that going to impact kind of capital flows, both in and out, and then kind of just behavior, right? Behaviorally, what's going on. And a lot of that comes with price action. A lot of that comes with just understanding just general trends that you oftentimes see in trading. So last time we kind of hopped on, markets were significantly different, right? And so we had a couple dull weeks there in the latter half of June. However, to start and go through July, we kind of talked about that 2,500 is that over-under number last week. And if the market was going to base over 2,500, it really could have some legs. Where would it start? It would go to 2,700. And if it really wanted to extend, it needed a base over 2,700 to really take a stab at that 3,150. And that's exactly where we stand in Ethereum. There's a lot of things that had to go right? And part of that is Bitcoin hit an all-time high. So we were right over 123,000 this morning during trade. And that's created a lot of excitement, a lot of euphoria in markets. And that's really changed the landscape. Behind the scenes, what's going on, right? Fundamentally, there's a lot of different things that are going on. There's Ethereum treasury companies that keep getting talked about, right? So the SBETs of the world that are being talked about. We're seeing inflows in terms of the ETFs, right? Not only Bitcoin, but we're also seeing close to matching inflows in Ethereum on particular days last week, which is net positive considering the difference in market cap. And we're also heading into crypto week, right? That's kind of deemed to be crypto week, where Congress is going to be going through some of the bills that are supportive of the industry, right? And so I have the bills here on the left side, and so left side of my computer, but Tuesday and Wednesday is when it's going to start, and the House will meet at 10 a.m. And then on Thursday, the House will meet at 9 a.m. And then last vote's expected no later than 3 p.m. on Thursday. And so there's 3 bills that are going to be kind of talked about here. And most important is going to be the Genius Act, right? And so that's the widely talked about Genius Act that we've kind of been following for a little bit. And so the expectation is that will pass. But there's a couple others as well that are up. So largely positive from the U.S. administration, and we'll see kind of how those go and get priced into the market. So markets usually are forward-looking, and that's why kind of this rally prior to the votes makes sense, right? So now that we are on the votes, there's a couple things that I'd like to talk about as we kind of progress through the week. One is the market's rallied, right? And absolutely, Bitcoin, there's no reason that we need to call a top. And the reason for that is a market that makes an all-time high is in a price discovery by nature. And so it really is unknown, right? And so we're going to take a look at some levels in which we would look for selling. However, the upside tail, especially to the right tail, right, that call side tail, is in play until further notice, right? And I'm actually pulling up volatility real quick to just take a look at that. However, last week I posted about Bitcoin making a new all-time high, and the 30-day implied vol market, implied vol futures via Deribit were still under a 40 handle, right? And so I have been monitoring Bitcoin, and especially Bitcoin options markets, for 5 years now, at the very least. Bitcoin for far more years before that. And I can't remember the last time I've seen under a 40 handle at an all-time high print that we priced basically 10,000 points in 3 days. So it's different times. The market is getting a bit more sophisticated. And it's quite apparent that harvesting of that vol premia is out there. Subsequently, with Ethereum, we have seen last week on the 30-day implied vol, we were down at a 62 handle, and quickly we repriced all the way up. We're looking at a 68, which is around that upper side of what we've seen over the last week. And that market continues to be interesting. So we saw a quick touch of 70 over the weekend, roughly, and then just a rebound in implied vol on the 30-day tenor. So those are important to watch. Skews were sold, so the call skew was back, and so we went from basically a front month that favored puts for some time, and now we're back in favor of calls. And through this acceleration to the upside, we saw that skew kind of bid up, and then over the weekend, since we've kind of digested around these levels, 3,000, Bitcoin is lesser acceleration, right? Less of that acceleration upwards. We've seen some of that reversion back. So kind of on a macro, that's what's going on. There's another few things that I want to talk about in terms of risk, right? As everybody gets bulled up, euphoric. But these are large macro events that absolutely could impact all risk assets broadly, right? And those are tariffs, right? So the tariff headline that we talked about last week is August 1st. That continues to potentially weigh on markets into a seasonally tough time for risk assets. Remember, September is seasonally a tough time for risk assets. Last year, we saw a front running of that in August, second midweek of August, right? And so naturally, we're looking at the August 1st tariff date as a potential kind of headwind for risk in the near term. And how that escalation happens, if that escalation happens, if those deals happen, if there's a prolonged nature to this negotiation, what does that mean for markets, right? And what does that mean for price stability broadly, right? And that's kind of more of what's concerning outside of just the tariffs in themselves. Yeah, and then the next piece here is seasonality, right? So we are heading into seasonally a tougher time. We're about a month and a half out, but I do want to note as some of those September tenors are getting activity, right? And so those are things to look at. And when I say activity, there's a bid to the call side. However, seasonality does matter there, right? So that's kind of what's going on a macro scale. There's been a lot. This week is going to be active. There's going to be a lot going on. And so levels are really going to matter. So let's take a look at those and let's dive into the week. So for those that this is their first time, we'll give a short little plug here to our website. We just launched it this year. We continue to roll out new features, but for the most part, where we spend our time when we're on the streams is the price map charts. So we've integrated all of our proprietary data and analytics into different brokers that support it, and we are actively rolling out some new ones in the near future, and then all the different asset classes, right? And so while we predominantly speak about Bitcoin and Ethereum here, and those are the markets that we cover on the Bookmap stream, we are cross-asset. We do support multiple different markets, and we do also monitor multiple different markets, right? Because that capital flows on a macro scale matters, right? So without further ado, let's kind of jump over to the price map charts. Price map, for those that are not familiar, is our proprietary data and analytics, and so we're going to pull up, and so you'll see this disclaimer. We actually do support crypto 24/7, 365. So those are just for our website feed. We're down on some of the traditional asset classes right now, but we still do support them through the brokers. So let's take a look at the weekly outlook. And I have on the left side, I have Bitcoin perpetual contract, and then on my right side over here, I have the perpetual market in Bookmap. And then let me pull up and make sure that we get the Ethereum price feed up as well. Cool. All right. So on the left, you'll see the price map, right? And the price map here is going to dictate levels that we can kind of talk about here. On the right, you're going to see our playbook, right? And so playbook covers the state, the structure, the strategy, option strategy and insights for the market, and then our score, right? Score is basically just numbers to dictate where it's best to deploy risk capital based on all of these different factors that we are monitoring, right? So we've kind of broke it all down into a simple, readable total score, right? To better help us primarily with sizing, but we also find it incredibly useful for others as well. So that is on the site, but we're gonna go through the state. So market state is in a bull trend, and this is a signature state. It typified by a market that continues to make higher move highs and higher move lows, or positive structure. If the market continues to hold structure, further gains should be expected. This does not mean they cannot be corrective setbacks, but rather any negative price action is expected to exhaust above the lower inflection point that will maintain structure. Any failure or break in the positive structure is more likely to produce a neutral shift rather than a negative transition. A quiet market is likely to turn positive, especially later in the trade period. Typically, if the market is going to trend higher, it will demonstrate that it with positive intraday price structure. If not, a firm digestive trade is the outlook. So, Bitcoin on the weekly. So you'll see we start each week, we talk about the directional. That's going to be our over-under number line in the sand. So that's 115,671.4, right? We didn't even get a shot at it this week, or this market's in an accelerating bull trend. We're in a bull trend. We continue to hold positive price structure. And we have done that through the open, which was Saturday night, into the Sunday open, traditional equities, index equities, open in the US, and then a base over CR plus, a tag of 128.50, price through it, and quickly a reversal, right? And so what this reversal is basically telling us is we are in a digestive positive state, right? Why? We've talked about UP reversals. All that needs to note is that is a market check signal, right? Does not mean that the market has to break down to 115,671.4, but that is a potential target, right? However, in a bull trend, which is the market state, the market needs to hold over 118,761, and that would complete a half APMD move. APMD is basically one of these down to the directional, that's one. And these minor levels here that you see with less dash lines, that's a half, right? So halfway down, the 118,761, that's a natural digestive pause. So that is a figure to monitor for the overnight. If we break this, let's say we break down, everybody gets paired up, says that the reversal's in, we're going right back down to 115. If we hold 118 and 3/4, basically, the expectation is we're going to ramp right back up, right? And we're going to ramp right back up, take out 121,850. And if we do take out 121,850, this market can quickly obtain the UT1, which is 127. And if it continues to have legs, remember we are in an all-time high. All-time highs need to be respected, especially in Bitcoin markets. Then 132, 133 is in the cards, right? So again, 118 and 3/4. If that holds, the expectation is we're going to ramp right back up through the session. The session is defined by Saturday at 0 UTC, right? Initial target of that hold is 127. And then if this market is good and you really get that extension, 132, 133 is that extension high. Let's talk about the other side, right? We're in a bull trend. That bull trend can break the moment that we can't hold 118 and 3/4, right? If we can't hold that and we break these price structure lows right here, the expected target immediately is 116, 115 and a half, basically, right back down to the directional for a what if lower, right? Remember, this market just broke out, so larger context matters here. A move right down to 108 is a market to buy. However, the expectation is we won't get there. It would be a very brutal shakeout in markets. It's possible, but there's two levels to look at prior to that 108 for buyers. 110 is where we see as a logical level here to basically complete a critical range rotation all the way back down to the DP or the directional, right? This market is positive. It is more likely that there is going to be bids stepping into the market. Volatility is not expecting large ranges, right? We're still under a 40 handle, which is quite impressive. So be ready and look for longs into kind of these key structure levels right? So a break under the CR plus down to the directional, a directional that holds, kind of puts more of a digestive positive outlook to the balance of the week. And then a break under 115 targets initially 110 and then 108. 110 to 108, that's the expectation for the best area to deploy risk capital, right, for this state. Let's talk about the structure here. The structure is positive, right? So sentiment bias, that green level that we talk about every week, that R level, it's below the directional, right? And so that kind of gives you the context that under 115, we're just looking for lower levels to buy, right? As close as we can get to that green level, as long as that green level holds, that's the best area we can deploy risk capital this week. Strategy, right? So a sell UP reversal, we've already gotten it. That trade's basically already done here. To get a full complete sell UP reversal, a target of 118 3/4, right? Is that normal heat check for the markets? If we can't obtain this, that is another show of strength from this market, right? And so volatility is low. A logical trade is basically delta hedging a position off with a buy a put against spot, right? So those are interesting kind of strategies to look at. And then again, the optimal strategy for risk capital this week is to deploy off that DP to that R level if we can get there, right? However, because we've already ramped up, as long as we hold 118 3/4, this is still a positive bull trend. It is not a market to fade or step in front of. Let's take a look at Bookmap. So Bookmap, you'll see some resting liquidity here, 118,500. Again, right in alignment here with that CR plus that we've been talking about all session. And then again, 114,500, 114, right? So right under that directional level, you have large liquidity bands that are just sitting there. Continue to monitor Bookmap this week for a digestive kind of positive outlook. This is exactly what I like to see, right? That resting bids that are sitting in there for size. They're looking to get filled, and they're just sitting and waiting, right? So those are all interesting levels. On the upside, 127,500. So direct alignment with that first target. If we base over 118 3/4 for this ramp right back up, it's around 250. Not a lot of coins sitting on the offer up there. The offer generally is lighter, right? Let's jump over to Ethereum and take a look there. All right. And we'll go over to the weekly. All right. So similar bull trend, same market state, right? So don't need to go over it again. Basically higher highs and higher lows. That's what we're looking for. So higher highs, higher lows, same thing. Let's zoom in here a bit, and then we'll zoom out. All right. So Ethereum did not lead the move, but it did follow the move, right? So a lot of people in the Ethereum community are waiting for Ethereum kind of just to take off. There's a couple things to talk